Welcome to Real Estate Hustlers Podcast. I am your host, Josh Appleman, founder and CEO of Appleman Properties. Today we have Chad Zdenek. I hope I didn't pronounce that wrong, but he's a rocket scientist turned entrepreneur, turned real estate guru with 25 years of experience, and has built $150 million of multifamily and self-storage portfolio, investing actively and passively across the U.S. Chad, we're excited to have you on board today. If you could pronounce your last name for the audience.
Zdenek. You're pretty
Go.
close. It's good for a first run. Yeah, Zdenek.
Appreciate that. So tell us a little bit more about you. You've got a large portfolio. We're excited to have you on today.
Yeah, cool. Yeah, excited to be on. Thanks so much, Josh. I appreciate it. So I've kind of had a meandering path over the last 25 years or so. And it really, as I kind of look back on things, it's been like three distinct chapters in my life. So the first chapter was 7 years working at Rocketdyne on the space shuttle main engines as a structural dynamics engineer. So super technical, just super technical, but exciting work. And then I left that business after I got my MBA while working full time. I left that business to go work with my brother on a startup, which was a lighting business here in LA. And you can probably appreciate some of the growth numbers. I know you've had some real good growth in your prior businesses as well. But so we grew about 2,000% in 15 years, had 75 employees, and basically became the biggest lighting company doing primarily holiday lighting in LA. And then in 2018, he bought me out, sold the business. And then I went into real estate full time. So I'd done some construction management for 2 years, stint early on, and wound up getting my contractor's license, did a lot of hands-on construction back in high school and college. And then, so I kind of call it going back to real estate in my third phase, which was 2018, but I went back more as an investor at that point. So eventually investing, and ran out of my own money and then started syndicating deals. And I've done primarily multifamily, although I've done some medical office and some self-storage now. So, and that's really been like the third phase of my career, which I love and I've been enjoying. And that's what I do today.
Nice. Yeah, I've got a really good friend, and one thing that he keeps saying is all roads lead back to real estate. So when we talk about a prospective business idea comes up, whether it's investing into a franchise or what have you, it's like all roads. Does it have the depreciation? Does it have the tangible asset component? Does it have this? Does it have that? It's like all roads lead back to the real estate factor. Can it be turned off? Can it get disrupted?
It's a good point, because I know you and I know a lot of entrepreneurs, and oftentimes the real estate that they purchased for their business winds up being more valuable than the business itself. I know that's very true for my dad, I bought the medical building from him in 2015, and that medical building wound up being more valuable than the eye surgery practice. He's still a practicing physician, but it's not as worth as much as the real estate. So it is very interesting. I think it's important to have that be a part of any entrepreneurial plan, for sure.
Yeah, and you saying that, I've never even thought of that, but that is true, that the business creates assets around you that are just not even it's not even a forethought. It's we need it for the business, for our operation. And even the one we built here is 15,000 square feet. Office and warehouse, and it still stands to the test this day, and it's brand new, and it works, and it's great to have as a piece of a growing piece of the portfolio. So you're absolutely right. But what was the propellant that got you into real estate? Was there a mind shift? Was it always on your radar?
Yeah, I mean, it had been on my radar for a long time, ever since I was in construction, and I knew, like, over the years, I knew a lot of people that had become very successful in real estate, right? And for probably 10 years, I said, I need to get into real estate. I need to get into real estate. And I was always trying to do it on the side. and which I always thought about doing it on the side, which was very difficult unless you do it like as a limited investor, limited partner.
Yeah.
Like that's a great way to do it on the side. And I just didn't know or think of that way. I'm a very hands-on guy, and I like to kind of know what I'm doing. It's an asset and a fault. But that's how I thought nonetheless. And so over the years, meeting a lot of successful people that made money in real estate really made me think like, I really got to get into real estate. And the thing I love about it is if you make an investment, whether as a limited investor or as general partner, like when you make that investment in a real estate, if it's managed correctly, like that investment should be able to grow over time. And depending on what investment you're making, you should be able to throw off cash every month too, or every quarter, whatever it might be. A lot of which would be not subject to taxes; it'd be tax shielded. So there's a lot of benefits there, and for me, just seeing a lot of people, be the beneficiary of those benefits, finally made me realize I need to get into this full time. I need to stop trying to think about how to do it on the side. And that's why when I was exiting my business, I did take quite some time to really figure out what I wanted to do to make sure that was it. Cause I have a feeling this will be my, the third and final chapter in my career, even though I got a lot of years left. I didn't want to just keep bouncing around to different things. So I spent a lot of time to think about what I wanted to do. I even hired a coach to help me figure that out. And then with that, I decided, yeah, real estate's it. And here I am, 5 or 6 years later, and I'm really glad I made that decision.
Coaches are huge, especially if it's a performance coach where you set targets with them and they push you to answering the hard questions of why haven't you done this or that yet, and then it kind of forces you to be accountable to a coach, and before you know it, you're accomplishing things that you thought were distanced before. I never even set goals or anything before really reaching a level of success. It's a constant grit and a hustle just to get there. You see it in front of you, but man, you start setting goals and have a coach around you, it's amazing what can happen. And then
Sure.
you'd said the final chapter right now, it's I'm assuming you're in the second quarter, which is accumulation phase. The third chapter is where you harvest, and the accumulation phase is fun. And real estate, if you're accumulating assets, that's exciting because almost every asset is a trophy. So it's like proof that you're going in the right direction. And that's another testament of why real estate's so much fun to be involved with too.
Yeah.
When did you realize it was time to start syndicating? And then how, if you could, let the listeners know what that journey looked like and how you got there.
Sure. So yeah, I made my first two investments in 2015, and I bought a medical building, 10-unit medical building, which my dad had owned. He bought it from his dad in 1986. So I bought that building from him in 2015. And then I also bought, of all things, a sober living home, which is a story for another episode. But
Cash cow though,
anyways,
right?
What's that?
Those are cash cows, aren't they?
Well,
They can be.
It depends. Yeah, like I said, a story for another episode. But mine was a sober living home for women and kids, so it has its own challenges. But
Got it.
anyway, so those were my first two investments on my own, and then realizing that I only had a finite amount of my own money. I could borrow a lot from the bank, but in terms of down payments and CapEx, I only had a finite amount of money. And I tend to get involved in pretty CapEx heavy projects, value add projects, which works out well with my construction background. So I knew that I wouldn't be able to do a whole lot of projects before I was out of money. And so that was the impetus to bring on other investors, share the investment with other investors, share the risk, share the reward, and really go into syndicating, which is kind of pooling people's money together to purchase an asset. And that's what I've been doing full time for the last 4 or 5 years. And just working with different investment groups that I bring on and put together to take these deals down.
Nice. So what was the journey there? Did you hire a mentor or get with a group to start learning how the syndication process works and then investor distributions and accounting and all the other fun mechanics that go along with it?
Yeah, so my start was actually pretty unique. I didn't join any groups. I didn't even partner with any other people. I was the solo general partner in my first syndications. And so I did everything from A to Z, which can be a bit challenging, especially when you first start out. It takes a ton of time. There's a fair amount of risk in that, although I had quite a bit of experience myself, so that kind of helped mitigate that part of the risk. But the workload was really, really heavy. And but I did everything from A to Z, working with brokers, working with loan brokers, finding the financing, finding investors, bringing investors on, doing the due diligence for the properties, securing the properties, signing on the loan, hiring the property management company, hire the general contracting companies, like everything, right? So I learned a lot, which has been very helpful in larger deals I'm doing now with partners. But in the beginning, I just did it by myself. And then once I had done some deals on my own, figured out that I wanted to try to do things smarter and do bigger deals. So that's when I actually joined some mastermind groups. I joined the real estate guys inner circle group, which I'm still a part of today. And I also joined Raise Masters, which is like a capital raising group put on by Hunter Thompson. And those have been great groups. And then I've also been a part of the Entrepreneurs Organization
Yeah.
for 10 years now. So that's been like a really great group just in terms of self-development and business development. And like I said, I've been in that one for 10 years. So like those are my three main groups where I kind of network and get a lot of information from, a lot of growth aspirations from. And but I did it kind of backwards. I did my own deals
Yeah.
first.
Well, I like the way you did that because it's like entrepreneurs, they want to hug their teddy bear and not play basketball fair at first because you want to learn everything there is about every facet of the business. And essentially, if you're going to put somebody in front of you, you want them to do what you feel is the right way of doing it. And you can't put them in front of you unless you know how to do it yourself. I have the same problem, but I think it's more of a gift than a burden in some aspect. But it does come a point where you have to delegate. You have to get somebody in front of you for you to grow, and that's it's just
Sure.
what we do. And
Yeah.
we don't ever ask somebody to do something that we wouldn't do ourselves or know how to do. And I think that keeps us safe. That keeps us in a position. If somebody fails, doesn't show up, doesn't do something, we slide in that seat and we get it done.
Yep.
Very cool. What have you learned with being in the mastermind groups? Has that accelerated your growth?
Yeah, it really has. And it's been great being a part of those groups. One for the networking aspect of it, but two, like it tends to compress timeframes, if you will. That's one of the theories that the real estate guys put out there is like when you join these mastermind groups, if you get stuck or you've got pothole you're trying to avoid cruising down the road, it really helps when you're talking with and networking with other people that either A, could have already been down that road, or B, just like looking at things with a different perspective. And within these mastermind groups, they tend to be a kind of a high level of trust. So you can get to know each other's businesses pretty well. People are really helpful and wanting to help each other out. And for me, it's like helped basically compress time frames. So
Yeah.
when I first started, I was doing like $2 to $3 million deals. And then once you start partnering and being more like a general partner with other people, then I wound up doing much larger deals, like the 20 million to $50 million range now. And so those deals it is a different animal, working on those really big deals, but it helps when you've got partners that you know, like, and trust to take down these much larger properties.
Yeah, that's where everyone has a key spot in the GP, and everyone comes together on those group meetings. And you got asset management. You've got, of course, are you all managing your own properties? Or are you third party?
Either or. So I manage a few. but a few of my smaller properties. But on the big properties, you have to go with third party, like professional property management. But even having like a third party property manager in place or management company in place, it actually takes a lot of management to manage the manager.
Yeah.
And that's also something I didn't quite realize the depth of involvement there. On one of my properties, we've got a 200 unit property out in Orlando, and we actually swapped out our property management company just because we had some challenges there. And that was, I mean, that's like a monster effort to change property management companies midway through, or even if you're onboarding, at purchase or at close, like there's a lot of work that needs to happen. And so from an asset management side, the asset manager kind of manages the property manager, if you will. And typically the GP team are the asset managers. And there's just a lot of work that goes into that on these large properties.
Yeah, it's the armpit of the business. It truly is. It's especially when you're uncovering what you don't know, and when you're transitioning over management, and people learn the property, they know the property, know the tenants, and you're essentially trading them out for a new management. And then you all are new to the project. There's a disruption, but it's for the betterment of the project too, in a lot of cases, especially
Sure.
if it's being mismanaged out of the gates. And we've been there, and it's no fun, but there is, once you see the daylight, it's well worth it for sure. So what are you all currently investing in? What's the path forward?
So yeah, so we're definitely still very bullish on multifamily. Obviously you got to keep a really close eye on debt right now, either through fixed rate loans or through interest rate caps and whatnot. So you got to really know the debt piece of it. But investing in good markets, I think, is still a great investment. So we're still doing multifamily. We're also doing self-storage, which traditionally self-storage does really well through recessions. And there's also, it's just a lot less headaches. You're managing boxes instead of tenants, and that's a totally different animal. So yeah, we're getting really good returns on self-storage. And perhaps more importantly is really just diversifying a bit. You just never know what's going to happen in an asset class, and they all go through cycles. It doesn't matter what it is or where it is. Like there's always cycles. So for me, all my previous investments were all in Southern California. And then I realized that, I really should be diversifying a bit out of California. So I did that in the multifamily space, and then realizing, well, now I've got a lot of multifamily and I really should be diversifying into different asset classes, and self-storage is something I really like. So that's what I've been doing now. And just last week, I was actually in Dallas looking at a Class A apartment building, 200 unit building, and in Alabama looking at a 350 unit self-storage property. So
Nice.
So those are like the things that I'm looking at right now with a really keen eye on the debt part of the deal.
Yeah. And the cool thing is there's so many similarities between multifamily and self-storage. The asset class and the way the business is run, there's similarities, but self-storage has much less of the people component, the toilets, termites, and we'll say toilets and termites. And that's a huge component of multifamily, is managing the people. Getting the buildings leased up is great, but then collecting rent, it depending on we're workforce housing, but it's just it's work. It truly is. It's not passive when you're in the mix of it. It's got to stay on top of everything.
Yeah.
So you all are putting LOIs out, you're still putting offers, or are you do you feel like you're going to be waiting to buy or actively seeking to put more under contract? Or
Yeah, no, we're definitely active buyers right now. So for sure. So those two properties, one of them's a backfill deal, and one of them's a deal that was just put under LOI 2 weeks ago. So
nice.
And then I've got another group I'm working with where we're actively looking for a 30 to $40 million building. And once we find the right building, we'll go under contract on that. So yeah, definitely very much buying. Something to think about for your listeners is, I mean, I'll be the first to say that I'm a terrible market timer. I'm wrong about 50% of the time, but it's so I don't market time at all. And what I do, I believe there's money to be made in all markets, and what you're focusing on needs to continually shift. But I'm a continual buyer. But here's the thing: some people say, "Oh, we're going to wait till interest rates come down, and then we're going to get back in the game," and blah blah blah. There's too much uncertainty right now with the Fed and inflation and all this sort of stuff. But what people have to keep in mind is like let's say, okay, if they really did reduce interest rates even back down to 4% or something like that, your asset prices are going to go through the roof, right? So you would have missed this bottom, if you will, right now that we're in. The other issue too, and this happened to me in '08, was interest rates could go down, but you might not be able to get a loan,
Yeah.
right? So your net worth requirements, your liquidity requirements, like could be so high that you just can't get a loan, even though the interest rates are low. Or you could have the credit facilities dry up and banks just aren't lending, right? That's a very real scenario. So for me, I'm still buying right now. We can, like I said, we're keeping a really close eye on the debt, but we can secure debt right now, which by the way, are at 40-year averages, right? We're not, the debt's not high right now. It's just happened.
Yeah.
It's at the 40-year average. We were just at very, very historical lows for several years. So maybe some newer investors or newer syndicators might have a perception issue there if they've only been looking at it for the last few years. But like when I bought a property in '08, my house, actually I bought it in '09. It had gone down a bit. It wasn't at the bottom, but it had come down a little bit. And the real bottom was like 6 months later, right? For my area. And I'm like, initially I'm thinking like, oh, if I just would have waited 6 months, I could have saved another, 50 grand or whatever,
Yeah.
right? Not a lot of money in the big scheme of things. But the problem was I guarantee I would not have qualified for a loan 6 months later. I would have missed it. And for the sake of trying to save 50 grand, I would have missed the deal. And now my house is probably worth, I don't know, 600 grand more than what I bought it for. It's a lot more. I don't even know how much, way more than 50 grand. And so if I'm trying to penny pinch on a market timing to save 50 grand, but then I can't do the deal later, like that's it's just shooting yourself in the foot, in my opinion. I learned a lot going through that and managing my business through '08. So for me, I'm buying, but I'm just kind of adjusting what I'm looking at and where I'm investing and whatnot.
Are you all underwriting to hold for 5 years, 10 years? What's the time horizon?
It depends on the deal. So I've done, typically is 5 years. Although I just closed on a fund last year where we're planning on infinite holds.
Yeah.
So at least 20-year holds. But the idea is to return investor capital and keep them in the deal so that they have what we call in the industry infinite returns.
Yeah.
Right. So they're still getting their passive income, but they don't have any money in the deal. So technically infinite returns. So that's what we're doing on that fund. And that's like a short-term rentals fund.
Nice.
But yeah, so it depends on what we're doing. We do kind of vary that a fair amount.
I say that because I know me and you can agree that no matter what, 5 years from now, 10 years from now, particularly 10 years from now, real estate will be at a much higher basis along with rents as well. And that's just the trajectory of history proving itself. So buying now and not waiting, you're still going to, if you have a long-term vision, then you're still going to be in a great position 5 or 10 years from now.
Yeah. One thing I'd say that we do, regardless of the hold period and regardless of the asset class, like for us, we're very focused on cash flow. So it doesn't need a cash flow from day one, but typically within a year or so, we really like to see cash flow. And that is great because you're getting cash flow. A lot of the times it's tax shielded from depreciation expenses. But you also know you've got some margin there, right, with the bank, with expenses, and depending on where things go. So that's a great, for me, it's a great investment, and we invest for cash flow regardless of the asset class, regardless of the state, regardless of what type of apartment or whatnot. We look for cash flow.
I think that is you're an entrepreneur, and I think that's one of the gifts is building a business that's based on cash flow, because cash in, cash out, you have to have margin there to make it make sense, including the little R&D, the part that you find out that is not the right way to take things. There's always that expense, and you look for better ways to cut expenses, but might not be a better way, and you got to spend a little bit of money to get there. So you got to have some cushion along the way.
Yeah, totally agree.
What if somebody wants to start getting into real estate? They either they don't know if they want to be an operator or passive investor. What would you recommend the path that they start taking down for the listeners?
Well, education is always a pretty important part of it. Listening to podcasts like this and just hearing other thought leaders out there. What are they doing? What are they thinking? You're going to hear a bunch of different opinions, right? It's definitely not groupthink within real estate. I mean, I know real estate people that are totally on hold right now, right? They're just waiting. Yeah. So you're going to hear a lot of different opinions, but I think education is really important. Something that's probably a little bit more action oriented than education. I think a great first step is your first limited investment, right? Find an operator that you really know, like, and trust over time. Follow their deals ahead of time, and then figure out what kind of asset class you'd like to be in, and then make a $50K or $100K investment into that and really follow it, right? Like if you're following it to learn, not just to make money, you're going to pay attention a lot more. And, you're going to hop on the asset management calls. You're going to read through the financials or the updates. You're going to look through the financials. You're going to really dive into it. And you can learn a lot that way. And you're not risking anything but your own money, right? And like I said, if it's with the right operator, it's probably a really safe investment anyways. And that, I think, is a great way to start. If the next kind of level above that, if someone does have a little bit more experience or they really want to get started, they could partner on someone else's deal, right? And there's a lot of different things that they could bring to that deal that would be of value. You just got to kind of find the right partnership that partnership that's looking for what you have to offer, whether it's time, talent, or treasure. And then you could, if you know them well, and you could partner with them and become a co-general partner. And that's another great way to learn. And then the top of the pinnacle is like running your own deals. So, I mean, those are like 4 steps, I think, that would be increasing involvement to kind of move you along that sliding scale to getting into real estate.
Yeah, no, that's awesome. That's great advice for sure. What kind of books would you recommend?
Let's see, books. I think Ken McElroy puts out some good books. ABCs of Investing is his beginner book. He's also got an advanced investing book, which is also really good. And I don't know, those are like good, fundamental evergreen basics. But I do think like podcasts and videos, YouTube videos, I think you can learn a lot there, and it's a lot more real time. It's in this market, it's changing like daily right now, especially with the Fed meeting monthly. We just had our first pause on the federal hikes in 15 months, I think. So like every month that's changing a lot. Lender requirements are changing a lot. So you got to learn the fundamentals and the foundation of stuff, but you also got to be paying attention to people that are actually in it right now, because it is changing very quickly.
Yeah, right now there's a lot of dynamics that are going up against it's almost every facet of the market in somehow, some way. So it's but one thing is for certain, that people will always need housing. I believe so. We'll see.
Exactly.
Perfect. Definitely appreciate you coming on today. If somebody wants to reach out, learn more about you, Chad, how can they get a hold of you?
Yeah, so probably the best bet is either through our website, csqproperties.com. As you can see over my shoulder here, CSQ stands for Challenge the Status Quo.
Nice.
And or on any social media as at CSQ Properties. And I also put out an ebook for entrepreneurs, which is at passiveinvestingentrepreneurs.com, and that's plural, passiveinvestingentrepreneurs.com. I have a free ebook there, which I think would be really helpful for entrepreneurs. It's more focused for them, trying to help out my people.
Well, and you know, a lot of them are so ingrained into their daily business activities that they don't think about real estate as a part of it, of the journey getting there.
Exactly.
And if you can help them open up their eyes and get that a part of their portfolio, that's awesome. That's huge.
Yeah.
Cool. Chad, we definitely appreciate you coming on today. Look forward to following you in your journey, and we'll certainly talk soon.
Cool. Thanks, Josh. Appreciate it.
Okay.